Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial filing that's a bit like a roller coaster that doesn't quite reach the top, a story about a company changing accountants and facing some financial bumps along the way. We're looking at an 8K filing from AltEnergy Acquisition Corp, a company that seems to be navigating some tricky financial waters. The main event, a change in their accounting firm from Markham LLLT to CBIZ CPAs PC. Think of it like switching doctors, but instead of your health, it's the company's financial health on the line. This change happened because CBIZ acquired Markham's business. So why does this change matter? Well, the accounting firm is like the financial referee for a company. They make sure everything is above board and accurate. A change can signal a company is looking for a fresh start or trying to address some underlying issues. Now, here's where things get interesting. The previous accounting firm, Markham, had some concerns about AltEnergy's ability to continue as a going concern. This is accountant speak for questioning whether the company can stay afloat. These doubts were raised in reports for both of the last 2 years. This doubt about the company being able to stay in business was due to not completing an initial business combination, which means finding a business to merge with before a certain deadline. If they didn't find a suitable business to merge with by that deadline, they would have to shut down or liquidate. The filing also states that there were no major disagreements with Markham about how the company was handling its accounting, its financial disclosures, or the scope and procedures of the audits up to the point where Markham resigned. However, there were some reportable events, and this is where the story gets a bit juicier. The company had previously identified some weaknesses in their internal controls related to how they were accounting for complex financial instruments, that is, tools used in trading that are sometimes hard to account for. This basically means they messed up some of the accounting, especially for things called warrant liabilities. W means they messed up some of the accounting, especially for things called warrant liabilities. WE statements were for the annual report on Form 10K for the year before last. Management also identified a failure to properly record some capital contributions and related costs tied to certain agreements with stockholders during a special meeting. This also led to the restatement, the correction of the company's quarterly report on Form 10Q for a few quarters. On top of that, there was another material weakness found in how they accounted for contractual liabilities. It led to errors in how they accounted for consulting fees that were supposed to be paid to their chief financial officer. This also led to restatements of their quarterly reports. AltEnergy provided Markham with a copy of this report and requested that Markham provide a letter to the SEC, agreeing with their statements or stating any disagreements. Markham provided that letter agreeing with everything, and it is attached as an exhibit to this 8K filing. Let's briefly touch upon their financial instruments. They're units which consist of one share of Class A common stock and 1/2 of one redeemable warrant, trade under the ticker AEAEU. The Class A common stock trades under the ticker AEAE, and the warrants, each exercisable for one share of Class A common stock, trade under the ticker AEAE, and the warrants, each exercisable for one share of Class A common stock, trade under the ticker AEAE, and the warrants, each exercisable for one share of Class A common stock, trade under the ticker AEAE, and the warrants, each exercisable for one share of Class A common stock, trade under the ticker AEAE, and the warrants, each exercisable for one share of Class A common stock, trade under the ticker AEAEW, all of them on the OTC Pink Open Market. Now, let's step back and try to make sense of all this. AltEnergy Acquisition Corp is clearly facing some challenges. The change in accounting firms, the going concern qualification, and the material weaknesses in internal controls all paint a picture of a company struggling to find its footing. The need to restate financial reports is a red flag, indicating that past financial figures might not have been entirely accurate. On the positive side, the company seems to be addressing these issues. They've brought in a new accounting firm and they've disclosed the past weaknesses in their reports. However, the risks are considerable. The going concern qualification means there's a real possibility the company might not survive if they can't find a business to merge with. The past accounting issues could also scare away potential investors. In conclusion, AltEnergy Acquisition Corp is a company with a lot to prove. They need to demonstrate that they fix their internal control problems, that they can accurately report their financials, and most importantly, that they can find a viable business combination to secure their future. If they can't, they might not be around for much longer. Thanks for watching, and if you found this breakdown helpful, don't forget to like, subscribe, and leave a comment below. What do you think about AltEnergy's situation? Let me know in the comments.